What's good, everybody? Mo Comma Sunday service. Today we are going to be looking. Oops, hold on. We are going to be looking at some specific stocks, what to avoid, what to buy, when to buy. This is more of a long-term investment. Leaps show right now. I'm Mo Commas, Mo Stacks. I am an attorney that invests on the side in my spare time, and I have six figures in my retirement account, so I'm always looking at the market, right? So, what to avoid? My list. Number one, Tesla. Number two, Intel. Number three, stocks at all time highs. And number four, companies that don't actually make money. There's no profit. Like, why are you guys investing in these companies that aren't making any money? Doesn't make any sense to me. Right? So here's my reasoning for these four. Right? So number one, Tesla. Tesla has just been extra volatile lately. Just look at this. It's a weekly chart, a 5 year weekly chart on Thinkorswim View. Just look how volatile this damn thing is. I don't want my retirement account to look like this. Ideally, I want it to come down here and slowly go up to the right. But there's just a lot of volatility, and a lot of this is because of Elon. Now, I'm not saying that we should always avoid this or that I'm going to always avoid it, but right now, like, he's falling out with the president, and we all saw that shit coming, right? So he's falling out with the president. Um, his and I don't know if anybody watched the going away, like, I don't know if you call it a celebration or ceremonial press conference. Bro had a black eye, right? So I don't want the CEO of anything that I own to be walking into the a press conference with the president with a black eye. There's talks of fights that he was fighting people in the cabinet or whatnot, and um, yeah, I just think he's all over the place. Not to say that he's not a genius. I just think he's lacking focus right now. He's lacking focus. The stuff that he's choosing to focus on, like, that a bunch of liberals buy Teslas, and then you want to support a Republican president. Now, who cares about what your politics are? That just doesn't make sense from a business standpoint to me, right? If the people that buy Teslas and can afford Teslas are typically in blue states and more on the liberal side, yet you want to throw or pour a ton of cash into the particular party that's in power right now, which doesn't make sense. And maybe he was trying to do that for SpaceX and all the other government contracts. But then, if that's the case, why do you start picking a fight with the president? And now they're reviewing his government contracts. Um, I know Tesla is trying to start their robo taxi service in Austin right now, and that's why some people have been bullish. But for me, I need to see that get off the ground. Also, there's competition with Uber, with Lyft, with Google and Waymo. So that's kind of a wait and see for me. I got to see if that's really going to push their bottom line. Is that going to really give them a new revenue stream? And number three, and more importantly, is Elon actually going to be focused on that? And if he's not focused on that, then I don't know where the company is going. So I'm not saying that Tesla is not a great company. I'm not saying that Elon Musk is not a great founder, regardless of his politics and whatnot. I just don't think that he is very focused on this company and the headline risks that come with him potentially losing government contracts or getting into tips with the president. That's just not something that I want to invest in my long term. That's not to say that I wouldn't swing trade this thing or I wouldn't day trade it, but specifically for my long term, I can't get down with Tesla. Number two, Intel, right? Everyone knows Intel, especially this was our parents' company, similar to IBM. Like, it was the darling of the past, the semiconductor company. But for me, it has failed to modernize. If you look at the stock over the last 5 years, it looks like its best days are behind it, right? The all-time high was in 2021, right? And look at the trend to date. Just keeps going down. Now, I am a big fan of getting good assets at a discounted price, but I just don't think this is a good asset. It has too much competition. The number one in the space is Nvidia on the design side. The number two on the design side is AMD. I don't think Intel is kind of anywhere in there. And then I would even go AVGO above Intel in the semiconductor space, at least for like the networking and data center networking products that they have. But Intel, it's the old lumbering semiconductor company trying to get money from the government to stay open. It designs and manufactures chips, and now those processes have kind of been split in two, where TSM does all of the manufacturing, and then companies like AMD and Nvidia do all of the design. And so I just don't see how Intel is a player. And I don't invest in anything that isn't at least a top two player in the sector. Ideally, I want something that's more of a monopoly. And I just don't think Intel is either. And its earnings have been trash for the last few quarters. So that's what I would avoid no matter how discounted this thing looks, right? Number three, Microsoft. I love Microsoft. I'm not saying this is on my list to avoid because it's at an all time high. Microsoft is hitting all time highs right now. And I don't want to buy anything at an all time high. This is a good asset, a great asset, but it's too expensive. So, my goal for anything that I do is to at least catch it 40% ish off. So, I couldn't even think about touching Microsoft based upon my rules until it gets down to like 370, 365, 360, right? So Microsoft, don't avoid it because it's a bad company. Avoid it because it is too expensive, right? Meta, same thing. I've been trying to get this in my portfolio forever, and I should have grabbed it when it was at 500. And I don't know why I didn't pull the gun there, but that would have been a great price to grab Meta. But that's another one that I am avoiding because it is near all-time highs, not because it is a bad stock, but it's just too expensive. But if it gets back down to 500, that's when I'll look to grab some Meta, right? So now my list of what to buy. And for me, when I say buy, I might take some leaps. Like, I like Apple more for leaps, and I might like ASML or LVMH more for long term. And the reason why is because I think ASML and LVMH have a better monopoly than Apple does. Not to say that Apple doesn't currently kind of have a monopoly on smartphones, with the exception of Android. It's number one, like definitely number one, especially in the U.S. sector. But it's definitely, I feel like it's easier to compete in smartphones than it's going to be to compete against ASML that has a monopoly on the technology for making semiconductors right now, and then LVMH that is pretty much consolidated the vast majority of the luxury brands that are out there, and has a couple of smaller competitors like Hermes, Kering that owns, I believe they own Gucci, but LVMH is definitely the behemoth in that particular sector. And number three, I'm buying all of these companies because they actually make money. Apple is hugely profitable, right? That's why I would buy Leap, and I would buy Apple Leaps. Right? ASML is profitable. I just looked at the earnings reports today. Candidly, I already own some ASML. Wish I would have bought it at a lower price, but ASML actually makes money, and they intend to make money in the future in terms of earnings growth, right? In terms of their projections. LVMHF, same thing. This one is the most discounted. However, like, it still brings in a ton of profits off of their massive top line number every single quarter, right? So LVMHF, especially when the economy starts going again or gets going, I feel like people are going to start wasting money on luxury goods again. So why not get a luxury stock at a discount? And number four, my main thing is just buy good assets at a discount. Microsoft and Meta are great assets, but they're not discounted, so I can't buy them. That's the best way to not lose money, is to buy good stuff when it is on sale, right? So just looking at the charts, at Apple, like they're in a fight with the president right now too. but more in a quiet fight. You don't hear Tim Cook coming out and giving press conferences and saying that the president has been hanging out with Jeffrey Epstein and all of that stuff, right? Tim Cook is in a quiet tariff battle with the president, right? I'm sure there's some negotiations and some lobbying going on behind the scenes about Trump wanting the iPhone to be made in America, but like you just don't you're not going to hear from Tim Cook like you're going to hear from Elon Musk like publicly. Tim Cook doesn't own Twitter, right? And Tim Cook doesn't tweet really. You rarely hear from him. He's more of an operator type of CEO than he is like a showman that like Elon is, right? A genius Robert Downey Jr. Iron Man showman, right? So Tim Cook, I feel like Apple, of course, like I do think they need to get another vertical, but if you just go look at their earnings and their profits, they still make a ton of money. They still make money. They're still growing profits, even though the iPhone is a one trick pony. But, you know, most people that I know that have iPhones love it and aren't thinking about switching. So as long as they don't think about switching, the services revenue is going to keep going up and Apple's going to keep making money, right? And we'll just have to see what happens from a political standpoint. But generally, the only time you're going to see Apple this discounted is if there's some macro event or macro news that is pushing the stock price down, and that's what I think is happening right now. It's not really Apple's deficiencies aren't the reason for its stock price decline. I think it's the tariff issue. ASML, same thing. If you look at 5 years ago, all the way up and to the right, right? ASML, and actually I need to redraw my fib levels on this one. It's 40% or more discounted. I bought it a little higher when I shouldn't have, but it's still like 40% off or more of its all-time high right there. And it's just in a sector. AI is the biggest sector right now in terms of growth, spend from all of these mega cap companies. They're spending a ton of money on semiconductors, and ASML makes the most advanced machines and lasers and things to actually make these semiconductors and make them where they're like so small but pack such an enormous compute punch because of this nanotechnology that ASML has pretty much invented and or just figured out how to do better than any other country or I'm sorry, any other company in the world, right? This is like specifically, I think it's advanced lithography. Intel was working on a long time ago. If they would have kept working on it, they probably could have been in ASML shoes and been relevant today. But ASML has a monopoly pretty much on that technology right now, and their machines cost hundreds of millions of dollars, and they sell them to like TSMs, the TSMs of the world, and other fabs. And I just think, not just I think, I've seen a lot of governments look at Saudi Arabia recently, our Chips Act, other governments around the world are throwing money at making sure that they have the most advanced semiconductors, which are used in weapons technology and all sorts of other things. So the company that manufactures the machines and the technology to make those semiconductors, and I think is going to do well in the future, right? Once again, one of the issues is who they can sell to. And that's a government decision, and this is what's been holding the entire chip industry back is our particular government saying you can't sell to this person or you can't sell to this country because we don't want them to have the most advanced technology. But what we've seen recently is that with some of these negotiations with China that the U.S. is having, if some of the curbs are lifted off chip technology, I think a lot of these semiconductor stocks are going to boom. ASML being one of them, right? LVMHF, we talked about this a couple of weeks ago. Same thing. Just looking at the actual stock, it's discounted right off to the all-time high, right? Who and I say this again. I think for the second, third week in a row, like if you found a Louis Vuitton jacket or bag, let's say a Louis Vuitton bag or a Dior bag, because LVMHF owns Dior, and the original price was $20,000, and you could get that bag for 75% off. Would you buy it? And almost every person would throw their hand up and say yes, especially the women and the men. Let's say the shoes, if you're in the shoes and not the bags or whatnot, right? We would say yes, but when the stock price becomes 75% off, no one's talking about that. But we'd rather have the Louis shoes or the belt that I see people spending $500, $600 on a belt, but don't have a place to stay, right? But when the stock price comes down this low, and this is a lot to do, has a lot to do with the tariff situation too and the economic situation, but this is one of these plays where this is going to go in my long term. I don't even think I can buy leaps on this, or I looked and there wasn't much liquidity. It was one or the other. Either they didn't have options on LVMHF or the Leafs didn't have liquidity, right? So I would buy shares of this, but this is something that I would probably tuck for 5 years or more. And I just don't think that of all the brands that LVMHF owns, Savage Fenty, Dior, Louis Vuitton, Moet, Hennessy, uh, literally like 70 others. I looked this up the other day. I think Sephora, it owns Sephora. Um, LVMHF is going to be around for a long time. It's going to be the luxury player, uh, the behemoth in the room, one of the richest guys in the world that's more quiet than Elon as well, Bernard Arnault, and his kids, who are essentially CEOs of some of the different brands, but not the holdco. I think it's well positioned for the future, and at some point in time, and I have a particular number where I want to get in, right? And specifically, our last topic, when to buy. I'm looking to buy Apple at $165. Looking to buy more ASML at $585 if it comes back down. LVMHF at $500 is my number. And one we didn't talk about, but has been my unicorn that I've been chasing for like 6 months now, is Eli Lilly. I would love to get Eli Lilly at $600. And sorry, this should say number 5, but more importantly, all of these, I believe, based upon doing some fundamental research, are good assets at a discount. Apple is probably the one right now that I probably wouldn't want to hold for more than 5 years, but I would like to get a good leap trade in on Apple at around $165, which is where I've seen there be some support long term at that particular level. All right. So that's it for this week. But in terms of my weekly stock picks, once again, my disclaimer, it's in the notes for the YouTube. This is for informational purposes only, this entire podcast. Uh, Investing, trading is risky. Do so at your own risk. You should do so in conjunction with any financial professionals or advisors that you may have. Also, do your own research. Right. The one volatility event we have this week is the FOMC meeting, which will tell us whether or not they are raising interest rates, lowering interest rates, or keeping them steady. That is the main volatility event. And I looked at the CME FedWatch tool. There's pretty much a 99% chance, at least this is what everyone is forecasting, that the rates are going to remain the same. But where the volatility may come is in the press conference or the statement after they tell us that the rates are staying the same. Whether or not they think they're going to be lowering at the next meeting, are they changing their perspective on one more interest rate cut before the end of the year, those sorts of things. And if something like that comes out, where if they say, hey, based upon the tariff situation or the jobs report or inflation data, it doesn't look like we're going to cut at all at the end of the year, we're going to see the market tank. If they say, hey, based upon what we're seeing today, we need to cut one more time before the end of the year, you're going to see the market take off. So that's what I will be listening for to figure out what my positioning is, at least for swing trading this week. I think the 18th, the 16th is Wednesday. So I'm probably not going to put on any trades until after this meeting, and or if I find something that pulls back on Monday, I'm going to be out before this meeting happens on Wednesday, because there's generally going to be some volatility around this And this is going to be a major red event, right? Not meaning it's going to red in terms of the market's going to go down, but the market's going to be watching what the Fed chair states at this particular meeting. Um, and the other wild card is that the Fed raises or lowers interest rates at this meeting, but because no one is forecasting that. But the forecast right now is that things are going to stay the same. So what am I doing to build my watch list? So what I always do is I go to koifin.com and then I go to the US sectors and I click and check off all the US sectors that I tend to trade. And then I go look at what are the top trending sectors. It looks like gold is trending again, right? Metals and mining are trending. SMH was trending until Friday, but it's still trending. It had a decent pullback. In fact, I probably should have been looking at the semiconductor sector on Friday because they had a pullback day, and then oil and gas. So those are going to be the four sectors that I'm looking at. And I'm not going to go into the individual stock names in those sectors, but I've shown you multiple times. Like if you wanted to see what's an XME or SMH or XOP, SMH is going to be the easiest. You can just type in SMH Holdings. Click inside one of these ETF names. Hold on. And then if you scroll down long enough, it will tell you what SMH includes and what the weight of a particular stock inside of that ETF is. An exchange trade fund. That's what an ETF is. It's essentially like an all-star team of stocks that are traded in one instrument. So you got NVIDIA, TSM, AVGO or Broadcom, ASML, Micron, KLA Corp, AMD, Applied Materials, Qualcomm, Texas Instruments, right? And essentially, these are all the main stocks in SMH. So I would probably go and try to find something that looks like what the entire sector is doing, that's performing really well, and wait for a pullback on one of these names in that particular sector. Just looking at this right now, and I know NVIDIA pulled back on Friday. It would probably be NVIDIA. This is what I would look at swinging. AMD pulled back pretty well too on Friday as well. So that's how I'm building my list. Also, this is also something you should do if you're thinking about investing in an ETF or in a particular sector, or if you want to build your own ETF, go look and see how other massive sec or ETFs are allocating um, their particular weighting on their stocks, like and what they're buying. Right, clearly they're bullish Nvidia, TSM, Broadcom, and ASML right now. Specifically the top three because they're weighted the most. Right, 21% of SMH is Nvidia, 11.5% is Taiwan Semiconductor, and almost 10% is Broadcom. So here are the top three picks for like SMH for VanEck, right? So yeah, just something to think about. That is it for today. I'm trying to make these a little bit shorter, unless you guys want to go over anything particular, a particular name.
No, I'm good this week, man. But I appreciate you nonetheless. What do you just a quick thought. What are your thoughts on um having an AI bot do exactly what you do as far as picking your orders and handling your stocks in that sense?
I don't think I know how to code well enough to be able to do that. Like people have been
But
doing that for years. They're called quants.
yeah, you
And
can always get a developer. I heard of a story of
yeah, but okay, so you get a developer, and let's say your formula or your code does something that you don't want it to do. So you got to call the developer. What if it's buying a bunch of shares or something? Or you would have to design it in a way to like I kind of already do that with automated orders to a certain extent where like
certain extent.
Yeah,
But
like I'll
there's
set
a,
set an order out there that's going to execute upon certain market conditions, but it's not like all automated. It's like, hey,
correct.
this hits this price, then buy this. You know.
But there should be a way to be able to take an in-depth analysis of the market, see exactly where it's trending. Upon extrapolating that data, develop a place an order which would be best suitable for a X amount of outcome. There is AI already that does it.
Yeah,
it's just
but
much of the fact.
DeAndre, but that's a full time job. Number one, number one, that's a full time job. Number two, they're called quants, and they do that for the big investment funds and whatnot. There are people that do that, but it's a full time job, and you need to know math. You need to know math really well, and you need to know how to program really well to execute all of this like seamlessly, and you actually need to have a strategy that works. So it's yes, the AI, and in fact, like there's a let me go look at the acquired. There's a company that's been doing this for a long time.
Yeah, it's the
That
'80s, and it's like I think it's named the Hydros, whatever, something along those lines, where they produced a 30% return every single year, and before they were allowing people to get in within the system, and then now it's just being slowly dwindled down to like a select few of members, and every single year,
Renaissance Technologies.
there you go, there you go.
Yeah. So they've been doing that. It's
Since
just
I think
you gotta be brilliant and or spend all of your time doing that. You know.
I think we're closer than we ever been before.
Well, but then once everyone is trading with AI, then there you lose your arbitrage from that, you know?
Yeah.
So that's the issue too. It's like if everyone's doing it, then you lose the arbitrage. Like the reason why Renaissance did so well is because no one else is doing it, or and no one else had that more so than no one else is doing, and no one else had the capability to do that because they're like number one. They've been doing this. You said since the '80s, like so. That's 40 years, 50 years of building code and programming
And
and
having real world to
strategies.
convince.
And
Yeah.
that's the only thing you're doing all day, you know? Like and getting the smartest people in the world from MIT and whatnot and having them work on this stuff. So like yeah, that's why they do better. But yeah, I would love to have a bot that works, but I feel like if it became it would either have to become a full time job for me or, um, yeah, and you would have to throw a lot of money into that. Either you need to learn how to code yourself. Even with ChatGPT helping you, you still need to know like exactly like what to code, and then the
I'm
the
getting
the most important thing is the strategy.
right now I'm getting a AI bot built to be a project manager for my company.
That makes sense. That actually makes more sense to me though, because it's almost like it's executing CRM for you. You know.
And then the next step is after I get enough information, I'm going to have it do everything as far as marketing. So if I can run, place ads, see all the data as far as which ads are working, which ads aren't. That is the next step. Project manager, then media buyer.
Yeah, that sounds like a full time job too, though. So
No, you just get a developer on staff, two to three of them, build out the AI bots. You probably have at least four to five of them just to see exactly, what's the pros and what's the cons. After you do that, you take that utility, you can actually sell it because you now have a,
well, yeah, but you're starting a software company. You just said you had to hire like three or four developers.
yeah,
So
I mean,
so you're starting a software company.
I,
So that's my thing. It's like, look,
yeah, because
I
then it is, yeah, then it,
the woman in the red dress. You listen to
yeah,
Alex Hermosi. So for me, it's just like, yes, anything can be a 10 million, $100 million business, but like, are you gonna stick with it long enough for it to become a 10 million to $100 million business? So recently, I've just been trying to do the same thing over and over and over again. We're even at episode 54 of this, right? Just
Are
do
you
the same,
serious?
yeah, same thing over and over and over again, and just try to get slightly better consistently. And then usually you'll have a big jump out of nowhere that just happens. That what tends to happen. So my law firm is over 10 years old. And that's kind of what's happening there. I'm getting bigger cases consistently, more cases consistently, just getting better every single day. The book fair company, same thing. We're selling books for 5 or 6 years now. So guess what? We know a lot about selling books now. And we could try something else, but we could just sell more books, you know? So like I'm just trying to stay in my lane, and I'm using all of this stuff and these tools to help me personally in those endeavors, and it helps me learn a lot about these other different avenues and marketing and whatnot. But I'm just trying to stay focused, right? If I learn something about marketing, it's going to be to make the firm bigger or make the bookstore bigger, that's it. And even on the stock side, doing this is because if I make more money, I need to figure out how to grow it somewhat passively, right? I still look at the market every week, every day, but it's not as active as me being in a deposition or being in court. So
Hmm.
yeah, so yeah, man. But yeah, that sounds. If you talk about hiring developers, developers are expensive, and that's starting a software company. I don't want to start a software company. If anything, I would build something like that internally to just help me get more clients. But yeah, yeah, even my video stuff right now, I could scale that, but I just do it for my one homie right now. That's it. And guess what? Like, he just hit 20,000 monthly listeners. Like, just doing the same thing with one person has been working better than doing a lot with a lot of different people.
You got a good point. You got a great point, actually. The Alex or Mosey route.
Well, yeah, just do the same shit. And you'll get better at it, right? And like you just have more shots on goal with the same thing, and you just learn more of the nuances. But yeah, I could have been a software developer, but then that's a whole different route that's going to take a bunch of my times, or I could just keep dealing with the shit that I know, the devil that I know. I know where all the bodies are buried in these particular worlds. I know where all the traps are now versus like some other opportunity that's looking all grandiose, and then you got to go figure out where the bodies are buried there and where the traps are there, they're shit in every business. Every single business, there's something that somebody don't like, or there's some issue, some constraint, some supply deficiency, demand deficiency, something that you got to figure out. So like I just want to stick with the stuff that I know right now, and I already got a bunch of balls in the air right now, so I'm just like, that's it. I can't take on anything else. I can't do nothing else. Then as Father's Day too, with the kids and shit too, it's just hard. So yeah, just figure out what pony you want to ride, and just ride that shit off into the sunset. I'm being real right now. That's just kind of where I am. I'm like, I could easily my law practice, and we still public, but I don't care. My law practice has grossed low seven figures for the last 3 years,
Okay.
and what I could do is say, let me start another business or something like that, or I could just keep trying to grow it to 10 million a year or 20 million a year. And I see other firms just like mine that are making way more than me, so it's totally possible, right? It's not like there's a constraint in the market or the market isn't big enough. I just need to keep toiling and keep growing to get to that size. But it's easier to do that than start some other law practice or start something else completely different where I don't know how hard it is or what the hard is. Now, my practice, like, I've been doing it for 10 years. I know how hard it is. I know where the difficulty is. And like I'm ahead of people who are starting today because I've been doing it for 10 years and specifically by myself. And 3, 4 years before that for somebody else. So like I know where everything is. Now I just gotta become better at it. That's it.
got a good point.
Yeah.
You got a good.
That's why I like this on the stock side. The leap strategy has been killing for me. So I'm doing more of that and less of everything else. My Shopify leaps are and they're about to expire this next week are up 140%. I had a big Apple trade that I got out where I was up 100% on that. My Google leaps that are about to expire next week are up 50, 60%. My AMD leaps now are finally up, and just finally semiconductors that came back up. So,
Yeah, yeah.
right? And those are positioned well to 2026. So, like, the ones that I'm going off today, if Apple comes back down to 165, I'm going to do some more leaps on that too. And
So,
that's
so for Apple, sorry to cut you off, but that brought up a question I had. So for Apple or any other stocks you chose, I know like the kind of the target is 40%, and then just do you look at the charts and figure where do you see support around the 40% number to get your like specific target?
on a monthly or a weekly chart because those levels are more defined than like the dailies. So yeah,
Yeah,
I'll switch to a weekly chart or to a monthly chart and see where there are some defined levels. And for me, from a probability standpoint, that's a better place to get in. Yeah,
gotcha.
long term support.
Yeah, because that's always been one of my questions. Is you know, people, it's one thing to find the company, but then another thing to find when to buy.
That's
You
the
know.
most important. But yeah, that's the hardest part. I feel like. So here, I'll actually show you Apple real quick. Uh, So the reason why I came at 165 for Apple, so we're on a weekly chart right here. If I go to
Mhm.
that 165 level, look at all of the support and resistance there over time.
One, two, let's see, like four at least.
Even going
And then
further,
I'm not even scooting to the right.
yeah, even going further back though. That's what I'm saying. So that's been a level that it's been responding at. So that's why I'm picking that particular level. Just look at how many of the instances it's touching or getting close to that. You know.
Yeah.
So,
And
and that's a weekly chart. We go to a monthly chart. I assume it's probably very similar. Yep, it's more than 40% off. Apple doesn't tend to get that discounted either, which is why I would probably pick it up a little bit sooner, right? Even that 181 level is not crazy to try and get into it there, but it's just more risky because the price is high.
yeah.
Right? So, like, that would be your aggressive if you were aggressive on this. And I'm not trying to be aggressive in my long term like that. But if you're aggressively swing trading this, you would probably try to hop in around that 181.05 level. It's a fib level right there, too, which serves as good support. But me, like, I just like look at all of these intermediate checkbacks right there at that 165 level,
Mhm.
and it's more discounted, closer to 50% off. Even right there, didn't quite get there right there, but I really like, yeah, if it breaks that and kind of comes right there, that's when I would think about a leap. Because even if the leaps they come down and Apple does bad to 132, that's still, if I'm a year and a half out, that's better position, for a year later, Apple to come all the way back up to this 260, 215 or something like that.
Yeah, yeah. And like you said, you've leveraged your money using the leap.
Yes, exactly. And that's kind of how AMD was and how AMD kind of looked. So that's why I took AMD. It came underneath, but like it popped back up, and it still seems to be holding around that same level around where we bought it, and a little bit higher around that 110 mark.
Hmm.
Because there's just a lot of support and resistance there. But yeah, better price would have been at $91. But once again, like for me, it's long term. So my goal isn't to just sell when we get here. My goal is to be able to get trade AMD at least all the way up to like this 154, probably 160, right? Because
Yeah.
if it gets all the way up here, you're probably going to see some more resistance come up with some of these highs here, even
Mhm.
even here at like, yeah, right here like 160. So that's why I buy multiple contracts. I'll probably try to sell if AMD gets up to 160, 155. I'll probably sell half of my position and then just
Hmm.
let the others ride. and hopefully it gets all the way back up to the all-time high. But I like the fundamentals. It's growing earnings. It's in a sector that's growing, and that Saudi Arabia deal uh, with the government and the chips. Nvidia and AMD both cut deals with Saudi Arabia for chips and whatnot. So I like it from a future growth standpoint still in the chip
Yeah,
sector. So, and it was discounted. So
and it was discounted.
yeah, more than anything, it was more than 40% off.
Yeah,
it was.
that's step one.
Yeah, yeah. So that's like okay, it meets my criteria, and I'm willing to suffer some of the downside and whatnot because I know I bought it at a better price than the
Yeah,
guy that bought it at 227. That's never buying stocks ever again.
yeah, that dude's upset.
Yeah. Oh no, he's never buying stocks again. His cash is under his bed now. Like it's under his mattress now. All the cash he gets put under the mattress. Cause yeah, so that's it. Like I'm just looking at value. I love a lot of stocks in the market right now. I just can't buy them when they're that high. So I'm just going around
Yeah,
looking for value. HubSpot was another one. I just don't like its earnings. I didn't like its last earnings report. It was like negative in profit standpoint. So I like the business. CRM is the behemoth. This is number two. I've always looked at HubSpot. I just didn't like its earnings report. That's why this one wasn't on the list.
yeah,
Maybe if it comes down to like 300, I'll think about it. But I didn't. The earnings for me, like I didn't like that it wasn't profitable. So like it was making money, growing top line, but the profits weren't growing. So that's the only reason why this one wasn't on my list. But it might if they turn things around, this one might go on my list too. I like the market. I don't think CRM's going away anytime soon. I use HubSpot for one of my companies, which is why I'm bullish on it personally. But I didn't like the numbers. So yeah, didn't come on my list. But if it comes down to 300, yeah, I might take some leaps on HubSpot. If it comes down to
yeah.
300, yeah, I'll buy some leaps. But I need a more severe discount. Um, but yeah, that's it. And yeah, I think LVMH. I'm almost certain that they didn't have options. It's a foreign. I think it's a French company too. LVMH. Yeah, that's why you have to buy stock. There's no options on LVMH. And what was the other one? ASML. I don't think there's no option. No, there are options on ASML, but they're just expensive. If you were to try to do a leap on ASML, because the price is $761 a share, it's 109.
Yeah,
Yeah, or yeah, 10,000. No, that's $109,000 for yeah. Nope, because you're controlling 100 shares and there's no liquidity because of how expensive they are. Not too many people can afford them.
yeah, understandably so.
Yep. So you got to buy shares of those two, but Apple, totally you can do a leap on Apple. Let's see, 2026. Yeah, 3,000, 4,000 without. I'm not saying this isn't a lot of money for the average person, but if you're dabbling in stocks, a few $1,000s is not a ton of money.
Mhm.
So you can go find some liquidity. Look at that December 2026 in Apple. You can, and it's liquid too.
All right, gentlemen, I'm out of here.
All right, deuces. You could go.
Um,
You could go find some liquidity in like December 2026 Apple leaps that aren't crazy expensive for like 8,000, or if you want to go a lower delta, because it's still pretty high, 86 cents on a delta, and for 7,000. So that's why Apple for me. Even if you want to go down to 75 delta, five bands, I buy like two leaps
yeah,
in each account, and that would be a decent. Like Apple has liquidity, so that's why like I already knew like I know I'm not buying Apple shares on a pullback to my number, but I will buy some leaps if it gets down to like 165. Yeah.
yeah, yeah,
Yep. And these will and actually if it gets down to 165, this will be down here. So we'd probably be buying like the 140s, the 130s, and these will be way less expensive if Apple pulls back to 165.
So, what are your when do you opt to buy shares versus leaps?
When I can't buy leaps,
No, there you go.
or they're too expensive. Like it's
Yeah,
too like because I don't want like if I what did I threw in the $7,000 max for my IRAs this year my
hmm
my wife's in my account And so I have some money sitting, and I sold my ELF shares at the wrong time apparently, but I just couldn't stomach that 50% loss, so I got out. Um, which is, and it's up like 100% now. But I have some cash sitting in those accounts, and I'm just waiting for a good time to get in. But I can't be overbalanced in one area. So if I were to buy ASML leaps, that's like my whole account. I don't want to
Hmm.
just buy one name, so it's based upon like I gotta buy shares of ASML so that I can allocate 5 grand or 10 grand or whatever to ASML. But
Yeah,
app,
yeah, yeah,
because that's a certain percentage of my account or whatever it is.
yeah,
But
yeah, yeah. Like you said, trying to keep it balanced.
yeah, not be too heavy one name or another name if I'm trying to balance my IRA.
Yeah,
So yeah, so then I'm like, okay, maybe ASML I might only buy 5 shares of that rather than like 100 controlling 100 shares with options. But Apple, I can control 100 shares without like it being crazy. And I'm sure if I went a year out only, then the prices are even more reasonable.
hmm,
So like you got more options, not no pun intended, but like you have more options with leaps. So I could go a year out, I could go a year and a half out and still find some liquidity in something like Apple. And it just depends. Like, how long do I want to hold this thing? Do I want to hold it for a year? And for me, this is just like a good way of like, okay, if Apple fell to 120, would I buy it? Probably. So I think that's why I go deep in the money with the leap. So do I think Apple's ever going to fall to 120 in the next few years? Probably not.
yeah,
Uh, so I would take something like this. It's more expensive, but worst case, like you get some shares for $120, and likely Apple's going to be higher and not lower. So
yeah. And then you
and
can decide what you want to do at that point.
yeah, or 3 months before, a month out, or
Yeah,
whatever
yeah,
before
yeah, yeah,
expiration. You
yeah.
got
Get out of it
you got
if you want.
options. Yeah.
You got options.
You could play it a certain way. So I feel like with shares, you could either buy or sell, right? Or I guess
Hmm.
you could do cash covered, or you could do covered calls with it too, right? But
Hmm.
other than covered calls, there's not really much you can do with shares. So yeah, I'd rather control some options, especially if they're far out. And frankly, that's what's led to my account growth over the last year or two, or these leaps that I've been taking. So
Okay.
yeah. Even ELF, I think there was an issue with their leaps. It's probably liquidity. I wish I would have took those with leaps instead of shares too. Yeah,
Yeah. See, leaps. I think I'm starting to look at now as like my next dabble point. You know.
yeah. It's just boring though because sometimes you might not have a trade for a month or two. You got to wait for it to hit a level. But
Yeah, yeah, yeah. But I
there's
rather, I'm
yeah
patient.
yeah there's gonna be less trades. Like you got to wait for it to hit your level and then hop in. But it meaning you got to have like a significant probably macro event or pullback for some reason. But
Yeah.
yeah.
Well, luckily with the current administration, I expect those pretty often.
Once a
Yeah.
quarter at least. Yeah.
Yeah. Yeah. Like I'm just
Yeah.
sitting back with cash reserves. Like, all right, dude, fuck it up again.
Yeah. But that's my next one, Apple, because it's like it's diverging from all the other tech stocks. All the other tech stocks are up and Apple's down, but it's only because the administration has found it as like a target. But if there's some back channel negotiations happening that we don't know about, and then they announce it, which Tim Cook is probably good for, you know,
Hmm.
negotiating with the administration and figuring that out, then Apple's going to shoot up to where all the other stocks are right now too. So
Yeah.
yeah, at least that's my hypothesis anyway.
Yeah.
Yeah. So yeah, I still like I said I don't want to keep Apple for longer than like for like a 5 year trade just because I feel like it is just getting old, just selling the same product over and over again.
Yeah.
But over the next year or two, I think it's still gonna figure out how to sell more iPhones, or at least the same amount of iPhones, and keep increasing the services revenue from all of the apps and all of the other stuff everyone's buying on the iPhone, the games and stuff like that. Uh,
Yeah.
yep. So, all right, folks, that's it. Have amazing Father's Day. Tell the
Back at
fam
you,
I said
man.
what's up. Hopefully they celebrate you.
Yeah, yeah, yeah.
Yeah.
Yeah, by leaving me alone.
Yeah. All right, deuces.
All right,
Sunday
man. For sure.
service. Making it
All right.
rain without the umbrellas. Peace.